Welcome back. It's Damian Gerard, your host of the Gerard Realty Show, and my co-host, Mr. Mike Mudry from USA Mortgage. We are going to have a lively conversation about a method of financing that I think most people just don't even know about, but it's growing. But before we get to it, I want to just kind of restate, because I think it deserves to be restated on a regular basis. The purpose of the Gerard Realty Show is to bring together experts who can help with the buying, owning, and selling of real estate in the St. Louis area. And a part of that, of course, is just promoting the St. Louis area itself. So we are going to have special guests on our show occasionally that will basically help with the St. Louis region and its profile in and out of the area. But, you know, there are so many people involved in a real estate transaction. The National Association of Realtors says it's about 43 people involved in the buying and selling of each house. And we find at the Gerard Realty Group that most people have somebody, but nobody has everybody. And so a big part of what we do is to bring together experts, whether it's in mortgage, whether it's in title insurance, home repair, plumbing, electrical, whatever it is. The purpose of the show is to bring together expert contributors so that our listeners can have a resource to go for whatever they need in their real estate ownership or buying or selling. So for your house, it really does matter. Hire a pro if you're going to do something to buy, own, or sell your property in the St. Louis area. Hire a pro because it matters. So that was my soapbox, Mike. And you were very...
And financing is a very important component to the buying and owning of real estate.
If we'll do about 200 transactions in the Gerard Realty Group this year, about half buyers and half sellers. And mortgage is 95%. I mean, it's just so rare that somebody, even if you have money, does it really make sense to put your dollars into brick and mortar when you can borrow, you know, from USA Mortgage at like free money? It's almost free. And after the tax deduction.
Yeah, if you have cash and you're thinking about paying cash, you could certainly at least have a consultation to make sure that that's the right thing to do based on your financial circumstances.
Because there's, if you think about, I mean, there's kind of a cost of not having a mortgage, right? So, So today, our topic is the 203K.
FHA 203K, a great loan program.
So just we always run out of time.
Yes.
So just an overview, what is it for?
An FHA program is one that allows you to purchase a home and finance the improvements to that home all at the same time.
So you're basically going to borrow the money.
That's right.
At the time of purchase to not just buy the house, but if that house, like for instance, everybody thinks repos need a bunch of work. And sometimes they do, whether it's all the time or not. But frequently, a repo or a house that's in distress is going to need to have repairs.
That's right.
And those dollars can be significant.
That's right.
A traditional mortgage, you can borrow the money for the purchase, but you cannot borrow the money for the improvements, and that's why we have a FHA.
Correct.
203.
So it is a great loan program, because whether this home is a foreclosure, a repo, whatever it is, or just a home out there for sale, and you go into it and you say, oh, I really like this house, it's affordable, but we'd like to do these improvements, we don't have that much available cash, you can do it all at one time.
So we don't need to really, I think, get into the details, you know, the mechanics of how that money arrives. But what are the I guess the important pieces you need to know going into it as far as how to get the program in order?
Yeah, well, you'd have to go in and first there'd have to be an inspection. You know,
which is standard,
not only an appraisal, but a regular inspection to make sure that whatever you're going to do is going to be to code and so on. And you're going to determine what costs, what improvements you want to do and what those costs are.
But I think you have to point out that those improvements, you said those improvements you are not going to do them because you can't do that. You have to hire
what you want done, and a contractor will have to do that. So the selection of a contractor is a very, very critical piece. Because what you can't afford to have happen is for any contractor to underbid what the real cost is.
Because if you underbid,
there's not enough money. You're going to have money out of pocket at the end, and that's the whole point of doing this. Because you can do this with 3.5% out of your pocket, like a regular FHA loan.
Exactly. So it's
having
very low
accurate
down payment.
That's right. Very low down payment, but having accurate numbers is very, very critical from the beginning. So like you, we have assembled a team of people that are experts in 203, from an inspector to the contractor. What we're trying to do, Damien, is make sure that that consumer is protected and that we have accurate numbers going into it as to what the cost of repairs are going to be.
Right, because if the costs exceed, then it's
right.
not going to be 3.5%.
Or if it's underbid. If it's underbid by a contractor that's a friend of a friend or something like that, then the consumer's going to be stuck holding the bag with money out of pocket at the end. It's not going to be pretty, and we want to protect people. So we have a whole team assembled with approved contractors, inspectors.
And when you say we, you're talking about USA Mortgage, because you guys are the biggest. You're the big dogs in town.
We do a lot of 203Ks.
Is it a really popular? I mean,
very
popular
much so.
program. A lot of people, because we don't do that many. I guess in the Girard Realty Group, we don't have as many. And that may be because we don't promote it as well as we could or should. But I think it's just, I'm going to mention it again because I want people to know that it's not for the do-it-yourselfer guy. It's not for somebody that wants to, buy cheap and repair over time or something like that. It's for somebody who wants to live in the house. There's part of the owner occupancy rules to it.
That's right. It's owner occupant only.
So you got a plan to live in the house.
That's right.
The appraisal is going to be based on as finished.
That's correct.
So is there two appraisals or just one?
No, there's generally just the one from the beginning.
So the one from the beginning, the appraiser is going to look at it for its current condition.
That's
and
right.
They're going to say, hey, this house is worth $200, but when you fix this and fix that and improve this and change in new kitchen, it's going to be worth $275.
That's right. And based on, of course, what the neighborhood, what the value will be supported based on the comps in the neighborhood.
Right, exactly. Just like anything would.
That's right.
So if you're thinking about a real estate transaction, you think about buying, this is really for buyers. But if you have a house that's for sale, that is distressed, that you are trying to get the best dollar for it, you should know about this program too, because maybe there should be a flyer in the house. Maybe your realtor should have that in their marketing material. There's an idea. Realtors doing marketing, right, to actually make your house look different than every other house out there. So if I had a house that was in distress that needed to have this kind of program to help it move, I would certainly want to have information about that in the listing.
Yeah, and it's also, when you think about it from a foreclosure perspective, or a house that is in disrepair and won't pass an appraisal inspection or a code issue. Most people, the only person that can go in there and buy that is usually a cash buyer.
Exactly.
Or if they have a big line of credit, it's essentially a cash buyer. So this allows the consumer to go in there and do all of this from the get-go.
Right.
There's actually a couple of options on a 203K. They have a streamlined version and what they call a full version.
And obviously one has more detail as far as what the finished product is going to be. Is that what the differentiator?
A streamlined version puts a limit on the cost of the improvements at $35,000.
Okay.
Okay, and you can't change the footprint. Major additions like a foundation addition.
So you can put in a new kitchen, but you can't move walls.
Yeah, new kitchen, cosmetics, carpet, appliances, heating and cooling, HVAC, different things like that.
Right. You can make improvements, but not structural changes.
Correct. So that's the streamlined version is a $35,000 limit. The full version, you can do much more with it.
But there are dollar limits to the total. Just
like a regular FHA loan, the base loan amount is just a little over $271,000.
Okay, so let's just round that to 3 because I'm not that smart. So I need to round numbers,
A purchase price roughly of about, depending on what the cost of the improvements are going to be, though the purchase price of the home and the cost of the improvements and everything else that goes along with it probably wouldn't exceed somewhere around $280,000, because by the time you calculate the 3.5% down, that's going to put you somewhere near that base loan amount.
So about a $280,000 total
in
purchase.
That,
and so on the full service, how much of that can be on the improvement side? I mean, can it be a $200,000 purchase and an $80,000 improvement?
Yeah, sure, on the full version, but on the streamlined version, it's the $35,000 limit to the improvements.
And is there no limit on the full version?
Well, as long as you don't exceed that loan amount.
Gotcha.
Right.
But there's no percentage requirements or anything like that.
Right.
So, as usual, this is it's a big
deep topic.
And we could probably chat for another hour or two, but we don't
the rates.
have time.
The rates are good rates. The 203K rates are not exorbitant at all, and the fees are just there's just those inspection fees. There's a disbursement process. It's not that complicated.
Credit's going to be about the same.
Right.
I think it's something that people don't know about. I think that we should talk about it a couple times and maybe get more detail or something. So
I'd be happy to give your listeners any information they need. They can contact me at any time at 314-503-6024. Or if they wanted to text me at 314-503-6024, just put in 203K. I could contact them, give them some information.
So text the letters 203K.
203K.
To 314-503-6024.